The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 25th day of January. My pleasure, January 2019, I might add. My pleasure to be here, noon to 1 p.m. 877-927-6648 is the number to call. Dow's up 238 points at 24,790. We were expecting a leg E. The big thing is, how does it treat this 200-period exponential moving average? So the price, the high so far today is 24,860. And if I'm able just to click on this, got to hit it exact, 24,693. That's going to be key. How does it swing over it and hold? How does it slip under it and try to retest it? Or does that become a break to the downside? We'll see in the next three sessions. That's Monday, Tuesday, Wednesday, going into Wednesday. We've got so the Dow itself is up 0.96%. The S&P is up 1.07. The S&P right now is trading up 26.44. It's interesting because I prefer if the discrepancy is that the S&P is up a bigger percentage than the Dow, and in points, the Dow's up 231, S&P's up 2564. It's about right. I would have preferred if it was just a little bit more in the S&P 500 stocks. It would be nice. At 2667, right now we're looking at just underneath the 2675.47. I better write that in. 2645. I think it was 47. Oh boy. You'd think that one would remember just 3 seconds ago, right? 2645 high. Okay, and this one is 2675.47. How did I put a 4 there instead of a 7? It happens. Okay, here we go. So 2675.47, and the high today so far is 2671.61. So it's got a little way to go. Funnily enough, the Dow has made that leg E, and the S&P hasn't yet made that leg D in the Chapman wave methodology. Remember, that's the whole thing about the Chapman wave methodology. The crux of the matter, if I can just find this right here, is that within the context of the waveform, once you identify the low bar, you want to see a buy signal upgraded quickly to a buy mode. The implication is that now you should be expecting this leg to go to a D, and then other things can happen. Just keep it real simple. All right, let's move this across. So I have the up arrow. It's just disguised. I'll put it in right there. So in a buy mode, there should be a leg D above 2675.47. If we can see a move towards 2679, then that 2698 on the 200-period exponential moving average should become a target. I've got left side, right side price time match. This is what we discussed a lot in my webinar on Wednesday. And thank you to those of you who have been emailing me about different things regarding the webinar. I always enjoy that. That for me is a big thing. I'm not interested in you telling me, it was a great schmate. I want to know, did you learn something? Are you putting it into practice? Otherwise, what's the point, right? So if I didn't succeed in doing, nothing's good. So if I'm hearing that, yep, now we got a little better focus on this or that, exactly what we covered, I love that. So we're looking at the MACD strong stochastics, pretty good at 85% in the S&P. That weekly chart will have a lot of resistance in the 26, well, it'll be next week, 2676 area. So breaking above that for that new, for a test of the daily 200-period moving average of 2698 would be really good. So let's just keep this in mind. A break to the downside. This is a news event market, right? Although based on the news, I would have thought that other than my technicals, which said we've got to rebuy the Dow yesterday, we were able, some subscribers were very lucky. I never know what to do with this. I put in my newsletter, the opening call, in my Traders Corner, I put in buy, and the most recent price, I always put it in just before it goes out. You've got the most recent price. And then I put buy, and I put, in this case, underneath a certain level, underneath 83 something, underneath 83 on the 3 times long UDOW, and it gapped down in the time period that it was sent out to the time period that the first trade could really have been actively put on. It dropped to 82, 82.15, 82. And then the stop held. So those people that were really lucky to get it then are in the position, and it's doing very well, obviously. Bought at 82, it's trading at 84.70 in 2 days. I'd say that's a pretty nice move. Hey, Days Young, I'm watching this really closely because at any point the other shoe could drop. You don't know in this particular market. Now, next thing that we want to look at is the QQQs. We'll get these done before the break. 165.25 up 2.05. This is up 1.26%. It has not gone to a leg E above 166.02, but it's acting very well. I can now stretch out. Remember, I like to have alternate chart formations, so you always know what you're fighting against. That's what you're doing in the market. So this arch can be raised a little bit more. Will there be a failure? Will it be a V-shaped pattern? That's somehow next week. Very interesting with earnings and a whole bunch of things going on next week. The Qs now at 165.24 could be at 168.50 Wednesday of next week. It could also be at 159. And this is really a very interesting period we're at right now. The technicals on the dailies that have just run, I mean, down 23% in the Qs, and then all of a sudden from December the 26th or the 4th, 24th, I know there was one difference. This is the one on the 24th, the others were the 26th. From 143.46, it goes to 168. I would have to say 23 points, 18% or something, just in the shorter period of time. That's spectacular. So this weekly chart is going to be the issue that we were looking at. We'll see what happens. Let's go on. We want to go to the IWM. IWM right now is trading at 147.08, up $1.61, up 1.110%. It too is underneath the peak D that was made at 147.92. MACD is good. Stochastics pulling back, but it's still at 83% and good. Now let's go quickly to gold. We'll go quickly now because when we come back from the break, we'll spend a little more time on it. I said to you yesterday, it's in a rectangle formation. You can go to the bottom of the range and then suddenly spring to the upside. I called it a sell mode, but at the same time, I had a caveat and said, but all we've done is we've moved, and I counted the number of bars, 14, 15, 16, I don't know, to the side, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, about 16 bars. So it goes just underneath that key support yesterday, closes above it. And today, what are we doing? We're testing the 1300.40 high of the 4th of January. Is that not an amazing feat? Almost a leg D, another couple of, just $1 or a few dollars. Well, another dollar from the high. 1299.8, less than $1 from the high. And you would have started leg D right at the 200 period moving average in the weekly. I'd say that's very good action. But in the meantime, back at the ranch, we'll be back. I want to show you something, other things that are very interesting, because the GDX is, we'll talk about it when we get back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So a couple of things here. Let me see. Ruby says EU could give United Kingdom a couple of extra weeks beyond March 29th deadline to finalize Brexit deal. I tell you what, I'm not understanding, and I keep trying to read about it, but wasn't it May's mandate, to have to implement Brexit because the public voted for it? I mean, I'm a little confused. Why is everybody so upset when isn't it how you implement exactly what it was voted on? Am I mistaken? Am I missing something? That's what I keep trying to read about, but people seem to miss that point. They're just talking about what's against May and what's. So I'm not sure. I'm going to try to find out a little bit more this weekend. But anyway, so just a quick question here. Someone asked me about 10 cent T. You know, I'd never trade this. I never remember the symbol. 10 Cent Holdings Limited, TCEHY. Nothing makes sense here. TC, yeah, there's no rhythm to it, so I'd have a problem with it. So yeah, what about 10 cent? Buy this now or wait? No, you have to wait. I think, yeah, you'll have an opportunity. It's 44.05 between 41.90 and 40, somewhere around there. Email me again. That's your best risk reward. If you are much more risk averse not. If you're able to take more risk, you could start a position here. I wouldn't A, B, C, D. This is like an E right now. It's very close to some kind of a pullback, but you could start a position here. Now, there might be a way, if you use options, I would buy the in the money 42.50 option, looking out like February. I'd even go to March. If this is a play that you really are interested in, because the weeklies help, really, the last 6 candles have been very good, so it's acting very well. It looks like it wants to go high, but it might need time. So if you want to look out further, I'd buy the 42.5 option. It's trading at 44.05. You'd be paying up for it, and you'd be paying because it's out the money. And no, I'm sorry, it is in the money, but out the month. It's going all the way to March. But it might be worth it because it gives you a real good sense of both your time, because you'll see the shrinkage of the premium as it comes down, and you'll see how quickly it jumps up if it becomes the sexy stock that it had been once before. Because every time it bumps up, that call premium would move very quickly, percentage-wise. Still might not be in the money. It'll take a little while if it pulls back. All right, let's go back to gold. So here I am looking at the GDX, and I'm saying, okay, that's the GDX. Yesterday I said, nothing really wrong. It's in a consolidation. I do have a sell mode in the daily, but the weekly is still holding pretty well, holding the 14-period moving average, had just gone down below the 9-period moving average. Suddenly you get a day like this. This looks to me like a news event. But if gold breaks decisively above that high that was made of 1300.40, let's call it, if gold breaks decisively into the 306, 310 area, it doesn't even have to close. It just has to break into that this week. That 200-period moving average in the weekly chart is now a magnet. It means from that moment on, you could pull back, but you are coming back to retest that 200-period moving average. It also says that you can go above it, but at some point you're coming back to test that. And that kind of goes with the rhythm that I'm talking about. If you're looking at the dollar, look at this. Peak D, we spoke about it yesterday. I said, yep, oh, look at that. We're just starting to break above peak C. Leg D, by the end of the day, it had gone much higher. Now it's pulling back, and now it's giving it all back plus some. And that says to me, I think I drew this in yesterday, the arch formation and the bigger arch in the weekly. And I still think the dollar is just in a big consolidation. The monthly chart says it is still the currency du jour. If you want to look at the British pound, sure, the British pound has had a spectacular run from 1.25s just beginning like the first week of January to 1.320 over the 200-period exponential moving average. Single whopping leg A to the upside helped the weekly chart look much better. And the monthly chart finally has a big fat green candle. The month is young, but it is looking much, much better. So this is a good sign. If you look at the silver contract, so gold, I missed it. Gold was, if I can find the darn thing, gold is up 18. So look at silver. In one day, it went from giving a little bit of a sell signal to a single, this is leg B. It looked like it was fading. That one didn't look good at all yesterday. That's what I said. Gold is holding okay. Silver's actually broken down a little bit, taking a bit of a breather. Weekly's still okay. But look at this. Spectacular move of 2.52%. And gold is up, of course, gold is a bigger price, 1.45%. So now silver's saying, hey, don't forget about me. I'm playing catch up here. And let's go to the EUR-USD. Did I just do that? No. Euro has a spectacular candle, but just after that peak F top from that 200-period moving average pullback all the way from the 1.56s to the low of yesterday of 1.12s, and now it's at 1.13. I'm sorry, it went right through from 1.3, just started the low of the day, was 1.13005, and now it's at 1.141. Fabulous single day action. It has to have follow through. Otherwise, these are just news-related bumps. And to say, the reason why I'm saying that is the GDX is still within this trading band. The XAU right now, this is the Philadelphia Gold and Silver Sector Index. Nice bump to the upside. It went to a peak F and G. It went to an F and then a G for the top that was made right there on the GDX at 72.85 on the 9th of January, and now looked terrible yesterday. And it has an up leg. Now, if this up leg continues and you've got a gap and you make a new recovery high, then I'm saying to you, this is different. Then there's a story involved here that is very important. You've made a peak D in the weekly chart of the XAU. So how this unfolds now is going to be very important. All right, let's get to the crude oil. Crude oil right now is up 51 cents, also challenging that peak D. It's really going to try to get a little higher. The weekly chart is struggling a lot more than the indices that we were looking at that are so strong in that single leg A to the upside. But there is good action in oil, 53.65 or 52 cents. And I'm just going to say to you that I'll reiterate what I said for a couple of days. I think crude oil is stuck in the 55s as resistance area, and probably the 50 to maybe 49s as support. All right. Now, what we need to look at today is how all the little pullbacks have been really very minor, and the spikes to the upside have been very strong. That says to me, I've got to look at the TLT, and the TLT is down 60 cents. So bonds, some money is still coming out of bonds and going to stocks. This is my reading, could be wrong. So that's about it for this particular phase. And now let's just look at our E-mini. Oh, look at that. Now it's going to say it's about to make the arch formation. The stochastic is back, 62, 63%. MACD's turned up, and it's just gapped up. It's in a leg C to the upside. What a fascinating market. It's in the rectangle formation. The wedge formation. Now I'm going to grab this in the break. I'll show you what I'm looking at here. There we go. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so the Dow's up 259. A comment here. Oh, boy, sure hope we don't get sliced up again with the SMHs. Yeah. So let me just explain what we did on Tuesday morning for the SMH, because all the work I did over the weekend, the long weekend, said that there should be some kind of a sharp pullback. I wanted what I thought was the most vulnerable to short, and I thought that the Dow could pull back quite sharply, and the semiconductors, and we got that spectacular move. We were lucky to get the exact top of the down move, and we got the bottom of the long side of the 3 times short ETF. And then it followed through the next day. And then all of a sudden, at the close on Wednesday, there was the stuff about LRCX. This is Lamb Research. Great earnings. It looked like it was great earnings. Lamb Research, and you've got a 7 or 8 point gap up already implied within about an hour of the close. On Wednesday, you've got the Applied Material also going to gap up. And I'm looking at this and I'm saying, I'm not sure that this is what's really going on. So I said cover. We were very lucky. We were able to cover just about, it was fantastic gain, 10% or something in just 2 days. And then it has this gap up yesterday morning. So we're out of it, right? And this morning I thought, well, I don't believe this. And then I also heard, I read and I heard exactly what I thought, that the orders were not there. Nobody's looking at great orders. In fact, there is a 40%, 50, 60%, some even have an 80% diminution in orders. So I don't believe this at all. I don't believe it. I think Intel's giving us the best story, that things are not looking so great. So we had a short this morning. We took a little bit of a loss, and I'm done. Now I'm going to have to watch this real closely. I still don't think that the story has changed, but the candle that we've got right now in Applied Materials is way better than it had been. So my thinking, and I talked this through with my friend who's in the business, I said, is it possible that this first quarter, we're starting, because it's a very big look ahead. You remember March is when they made their highs of last year. Isn't this like, this is what I call the internal low, that we start to see a change now this quarter in the earnings, and that the real effort comes maybe in a couple of months' time, that you actually see it? He said, that's not what I mean, anything you read about, he's not giving me inside information. I would not even accept that. No, he says, everything you read about says that they are seeing slowing down in all their earnings, all of these companies, especially the big guys, but they might be doing other things. And then I said, well, what are they doing? He says, well, you got the record buyback by Lamb Research of $5 billion. $5 billion, not even Buffett does that sort of thing. So yeah, the stock's at lows and you got a big buyback. Well, I said to him, my experience with buybacks is that they don't happen straight away. Sometimes they announce them, but they implement them over a year. It could be 2 years, it could be 3 years. They never say, okay, we're going to do it, and we're going to all do it by March. This is not what they do. They just implement when they think the time's right. So I'm not sure. All I know is that this is price action. Price is the arbiter of the trend. Trend right now looks very good. I'm not touching these things until I feel a lot more comfortable. Let's look at Intel. As it turned around, was down 3, maybe now it's up 3. No, it's down 3. Down minus 2.93, made a peak D. What do we do with the peak D? We always watch this to see if other things can happen. Certainly did here. It's in the 50 level yesterday, and this morning it hits 45.75, trading right now at 46.80. So I think that that's more or less the story. And Applied Materials, I was speaking to him about Applied Materials. I said, you remember, I recall then when there was a guy, Sanders, he was the chief. He was the guy at Applied Materials. And whatever he said kind of went, and it would have these spectacular moves of going single digits. It used to go up into the 40s, then come back into the single digits. And lately it's been in single digits and has gone to the 20s. The last one was, I think, 28 or something, 34.14 right there, peak D in September of last year. And it went from 34.14 down to the most recent low of 16. I would say almost cut in half. That's a big deal. But I did say, I'm a little worried. What if this is one of those big sell-offs? It takes 18 months or so. And Applied is really telling us that the whole sector might be in trouble. That would not fit my mega bull market scenario. He said, no. He said that happens with Applied. They put all their money. They got a new CEO. I don't remember what her name is. And she talks a good game, he said, but the real evidence is going to be if orders come back in. So I think we're all in the same boat. It doesn't matter whether you heard any news or good news or bad news. The semiconductors got smacked from the high that was made at 114 way back in March. They traded SNH. What is SNH? Sunny, no. Senior housing. Oh, I remember the senior housing. All right, that's not what we want. We want SMH, and it goes all the way from 114.55 in March down to the low of 80.71. That's a 30-year. That's a big decline, and almost a 30%, 29% decline. So this is a very good bounce now. It wasn't yesterday, but because 2 days ago, because of these 2 days, that candle on the weekly really has improved. I'm going to take it from there and just say, let's see what the trend tells us. So now I want you to look at, let's see, that was the question. Another question was BGG. It wasn't a question, it was a statement. BGG is Briggs and Stratton. So if any of you have had a lawnmower or something like that, you know the old Briggs and Stratton, put, 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 put. And it was putting along once at 27. Most recently, it was at about 12.30. And then it rallies peak A. I believe that's the double bottom. A, B, C, D, E. It makes a rogue wave F. And then suddenly the MACD and stochastic turn down sharply. And it goes from the 1450s to the low yesterday at 1140s. It's trading at 1198 right now. Wow. You see, I can't dismiss. I'm not just going to say, oh, the economy's just humming along, everything's great. It is very selective. And there are stocks that would normally be just humming along, like Briggs and Stratton with a little four-stroke engine, put, 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 put. But other things have happened. And as a result, I think we're looking at a market that says this is a bifurcated market. There are certain stocks that have done fantastically from the lows, and now they're kind of bumping into resistance. We have one right now. Walmart did spectacularly, went to leg D, then a peak D. We're in the under 93. It hit 98.35, and it's now down a point and a quarter at 127. This is going to be a very big tell for us because the weekly chart has come back really strong, like a propeller shaft, right back to the midpoint, from the 106 high to the 85 low, right back here to the 97s. What happens in the next week or two in a stock like a Walmart is going to be really important. It's going to be very interesting because of the XLF has gone to its leg D. That's what we've been waiting for. We are very lucky because I think we're lucky. I don't know. We'll see if we're lucky because our bank stock that we have, which is Bank of America, just spiraled up from we're in the 2460s, and it's trading at 2960s. This is a really nice move. So I don't know what it's going to take to get to the bad news where it went back to the 22s after the last time it was in the 29s. Basil Chapman, Tight Conditions Hour. We'll be right back after these important messages.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, so now we need to talk about this. There's some Drudge report I'm reading here. Who said that? Someone said, where did it go? Ruby said, the Drudge report says there is a deal to reopen the government that will be announced at 1 p.m. Eastern Time. They cite an unnamed source in the report, which is only a headline, unnamed source. So I'm not sure what resolving this does. This is a government issue. So it does help certain things. It gets one thing out the way. But all I can say is if Trump doesn't get at least a good part of what he wants, and he's relying on a 2 to 3 week hiatus to discuss it, he'll never get what he wants because that's the way it works. I mean, that's just the way it works. So I'm not sure how this is going to be, the response and the give and take and all that. Rumors, these are tests. Remember, sometimes test balloons come out. So we'll see what happens. If we got to be ready. Why? Because we're in leg D in something like an XLF in the Bank of America. Where the heck did that go? XLF. And now I was asked, can I give my overview again, just to repeat from yesterday? Yeah, look, there's the XLF in leg D. The Dow is in leg E. The S&P's hasn't quite made its D. Maybe it just has a spike and does the D. But this is exactly where we've got to start looking to see if there is a pullback, what would it do? So let me go. I'll answer the question on the S&P because I see I've got questions coming in. They're the usual ones which I could cover quickly in the last little bit, but let me just do that for now. Yep, there it is. So we've got the S&P just a hair away from the 267.547 level, 267 to 238. We're missing it by 3.5 points-ish. You could do that in the blink of an eye, right? I could even call this a peak C1, C2, because now it's close enough that I can use that alternate count. I don't have to do it. There's nothing I need to do. I'm looking at the MACD very strong, the stochastic at 85%. I'm looking at the unbalanced volume in leg A, B, C, D. The unbalanced volume is in leg E, even if though the price is only at peak C. I'm ready for anything. Let's put it that way. And that's the way I think you've got to trade it right now. It's done its job. It's had a spectacular run to the upside. All I can say is that it's the close today going into Sunday night and Monday that is really going to differentiate parameters for next week if we fail right now, or parameters for next week if we close really near the highs of the session, Dow up maybe 180 to 220, S&P up 22 to 27. That's going to be really important. Okay, got that out the way. Now let me tell you what I'm looking at. My suspicion was that with the S&P having done so well in the daily, but not good enough, even though it's a spectacular run from 2345 to 2675, I'm talking about chart formation. We spend so much time talking about the amount of time you take on the right to try to get back to where you were on the left, whether it's an arch or a cup formation, almost is starting to dictate to you the difficulties that you now have to overcome or the support levels that you have to be monitoring. I'm looking at the S&P, and I'm just going to say, at 2667 right now, if by Tuesday afternoon, Wednesday morning, the S&P is underneath 2614, that's the 14-period moving average, underneath 2600, let's say, just to give it a little room, then what we've done is we've seen the top for this particular phase from a bottom to the first big thrust to the upside. You've used, basically, even though it's 4 peaks, you've used up first gear just going to second. And now you've hit the hill. And you say, oh, am I supposed to go into third or fourth, or am I going to go back to second? This is exactly where you want to see the MACD, the momentum. Let's call MACD momentum, M for momentum, take over from the stochastic, which could start to slide, and it's turbo. You want to see the MACD maintain the fast-moving average, this green line, maintain the price movement. Because if this MACD starts to decline, the differential here is 14, it's plus 14. If it starts to get to just a plus 5 by next week, Tuesday or Wednesday, there's a good chance that you've seen the major thrust. And now what we're looking at, I don't think we break down just yet. I think we start a big choppy move that goes in a rectangle formation with maybe nominal new highs, 2700, 2705 on the upside. And on the downside, you turn that 2620 to 2600 into really important support, and that can hold for a week or two. But I'm still thinking it's February, somewhere in this February timeframe, that we get a test of the next big thrust to the downside. That's what I'm thinking. I'd like it to come from much higher up. I don't care what takes it there. I'd like the S&P to try to get to the 2745, 2755 area. Because if it can do that, it's saying, you know what? It's going to take so much bad news that we either crash to the downside, and none of these charts have crash formations like 1987. That's a done deal. We have other formations that say lower lows and lower highs, lower lows and lower. That could be the next phase. I think it's going to be choppy, and at the same time, beautiful trading market. You come down, you can buy it. You go back up again, you can short it. I think we're going to go into a very, very methodical rectangle formation, at least for the next week and a half. If there is no break by Monday, Sunday night Monday, just a real disappointment, really taking it down under 2600. If we can just hold and maintain this level for another 3 sessions, I'm not including today, I'm talking about Monday, Tuesday into Wednesday, I think that the SMH is going to tell us one story. The financials, the XLF, are going to tell me another. So for the email that I got, for the text message I got here, questioning, hi Basil, what's your target for the S&P 500? My target for the S&P 500 is the 2677 area, and then I'll deal with whether or not we're going to be able to go to the 200-period moving average. I think the 200-period moving average is going to be hit in the next 2 to 3 weeks. So that would be another, that's another 640. It's about another 200 or so Dow points, right? But in the meantime, I think we've got a lot of choppiness to go. And that's kind of how I'm looking at it. Now, for those of you who have portfolios, maybe you got out in time, but you never know if I don't know if you got back in time. My thinking here is on the next pullback, you've got to start making decisions whether or not in your IRA, that type of thing, you want to, if you haven't put any money in now, you got to start making some decision about whether you do or whether you wait. Why? Because if for any reason, I'm not saying it's going to happen, but I am going to say in the psychology of the market, I know from people I've spoken to just recently who are actually talking about the market in terms of their own up and coming retirements or in retirement, whatever it is, that those people who did get some money out, actually almost to a person has not put anything back in. And that's really an interesting thing. And one person who got out really perfectly, and watch the whole tumble the last 3 months, still hasn't got back in. And this person is very astute. I know, I just hear it from rumors over the amongst friends that this person has done really well, just trading his own account and uses some good his own timing methods. And I just say, you know, that's very interesting because I think a lot of people are there. They're kind of stuck. I'll be back. We'll do the final segment as soon as we return.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, Steve comes up straight off this, Dave White, and then Tom O'Brien. And have yourselves a great weekend. We'll see you on Monday. In the meantime, back at the ranch, let's do a little wrap-up here. CGC mentioned the Den rocket ship again. Yep, leg E at 47.99 of 378. Had a low just a month ago at 25. Not bad, almost double. And Canopy Growth, medical marijuana. So what we did for my subscribers, I had the webinar about 2 months ago, and I discussed what we wanted to do. We wanted financials. We wanted to get the, we missed a really great entry on one of the cannabis stocks. So instead what we did is we bought the MJ, the Alternative Harvest ETF. So it's doing very nicely. It's up quite sharply today. It's at 31.90, had a low of 23.01 back in December, and now it's trading at 31.90. That's pretty good. Nice cup formation, beautiful cup formation, the Jeff Wave methodology there. So all I can say is that if you're in particular stocks that have done very well, think about doing an analysis for yourself to say, it's done well. Would I like to not take off? Would I like to add to it on a big pullback? And where would that pullback be? Or does it look stretched and I want to take a little bit off and maybe put that amount back? Do an assessment right here over the weekend. It's going to be a perfect time because I think we're in for a really, this is a news-related chop, chop, chop. We're going into next week as if it hasn't been already, but I think it's going to be continuing. So be prepared for that. Even the TVIX, the VIX is down. It's at 18, and it doesn't know what to do. What is it? You know, I mean, TVIX. Now I want to go to the chin, the VIX. I mean, the VIX itself, the VIX index. Look at that. At 17.98, it's down 91 cents. It should be down more, but some people are still buying some insurance. That's the way it's looking at me. When it starts trading in the 16s, we're looking at something very different. NBV, yep, that's the one we missed. Yep, it's holding quite nicely at 655. It's worth looking at, but I'm not doing anything right now. Folks, have a wonderful weekend. Dow right now is up, and we've got acting well. It's at 100, up 152, 24,700. We'll see what happens this coming weekend, Sunday night into Monday, and certainly by next Wednesday. We've got a big border. We're looking at borders. Have a great weekend. See you on Monday. Check out my opening.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.